Hello, everyone. Good afternoon or good morning. Welcome to this discussion on artificial intelligence and financial crime, empowering your firm and your people through AI. It's brought to you by FINTRAIL and Lucinity and joined by our very good friends at Currency Cloud. Just waiting for people to join. People are still trickling through, but as a general overview. So in this session today, we're going to be discussing how firms can maximize the use of AI to empower their financial crime programs. It's not about replacing what you currently do and having AI take over and fully automate your fin crime processes. It's about understanding the advantages that AI can bring and the strengths of artificial intelligence and how to couple that with the strengths of your team and the human perspective. So how you bring the two together for greater efficiency, more engagement and more rewarding work for your teams and better outputs and ultimately more effective fighting of financial crime. So a couple of housekeeping points, all the usual things. So we'll have a panel discussion for around 45 minutes and then take some questions at the end. Like Zoom and other webinar platforms, there's a chat function you can see at the bottom. So please do feel free to add not just questions, but also comments and thoughts and any other feedback as we go along. Don't need to wait for the end to ask questions. We have some polling questions that we'll be carrying out throughout the discussion. So keep an eye on your screen for those. A recording of the session will be available online afterwards if you miss anything or you want to share it. If we reference any external source papers, we'll post a link in the chat window so you can access those. And if you're having any technical difficulties hearing or seeing us, you can alert us to that in the chat window too, and one of us will try to assist. So without any further ado, let's start with some introductions. My name is Maya Brain. I am the Managing Director at FINTRAIL, a financial crime consultancy. We work with financial institutions around the world to design, assess and strengthen their financial crime programs and advise on how to incorporate the latest technology and digital solutions. I'm joined by a truly expert panel today, real experts on this topic. I was going to say do this in alphabetical order, but it's all a bunch of J's. But thinking quickly, I guess first up would be James.
I mean, you've already introduced FINTRAIL, but yeah, so that's the easy job. But yeah, thanks for being here. It's nice to kind of be in front of everyone. But I work on the consultancy team at FINTRAIL, and Maya's done a great job at introducing us already.
And Jan.
Hi, so yeah, I'm Jan Philippert. I'm VP of Ops Strategy at Currency Cloud, but for the past 4 years, I looked after compliance operations. So in Currency Cloud, we are one of the leading cross-border embedded payment platforms. And that means that we basically have a wide range of different customers. We service other payment institutions, the likes of neobanks, but we also have, for example, some unregulated clients where Currency Cloud provides regulated payment services directly to their end clients.
Fantastic, thank you. And last but not least, Jeremy.
Hi, everyone. Thank you so much for joining today. My name is Jeremy Doyle. I'm Vice President of Enterprise and Partnerships at Lucinity. In terms of a bit of background on myself, I've been working in the compliance and technology space now for around about 14 years. And my first real exposure to AI was when I joined IBM Watson, focusing on the application of AI in relation to fighting financial crime. As for Lucinity, we are specialist fin crime software as a service company. We partner with our clients to solve growing financial crime challenges related to a wide range of areas, including alert fatigue, solid systems, and productivity, all centered around what we call human AI. So I very much look forward to this conversation today.
Brilliant. Thanks, everyone. So we're going to kick things off. We're going to start with our first polling question before we dive in. So should see that on your screens now. Please do respond. We'll share the answers in a minute or two. We'll leave that on the screen while we get started. So while people are doing that, James, maybe let's start by setting the scene. So AI is a hot buzzword, and even for those with limited knowledge, it's quite easy to imagine some of the possible benefits. But can you talk us through that in a bit more detail? So talk through some of the perceived benefits and sort of cited advantages and why people are excited about the possibility of using AI within financial crime compliance.
Sure, I will do my best. I mean, I think ultimately one of the things to start is there's probably a lot of the kind of there's loads of use case for AI, And I think you're probably maybe using AI with some of your existing partnerships already, but maybe not aware of it. So a couple of use cases being, things like anomaly detection in maybe the ID&V solutions you use, or maybe natural language processing in maybe the screening solutions you use. So there's loads of kind of use cases that maybe you are unaware that you're already adopting, but maybe using already in different kind of means. But I guess, particularly in transaction monitoring, AI won't always necessarily be suitable for everything or everyone. And I think just a few things to consider on that front are, I guess, the complexity of your product or the complexity of your inherent risks. So I think if you've got a simple product offering, or maybe your inherent financial crime risks are not overly complicated, potentially a more traditional approach to monitoring your transactions actually might be sufficient. Or also like the maturity of your firm, especially in things like the richness of the data. So making sure you're actually ready for adoption and things like that is definitely something to consider. So there's a few things that, a lot of adoption is clearly kind of happening across the board, but maturity is definitely something important to think about if you're moving that way, especially on the transaction monitoring front. But if everything does align, there's lots of theoretical advantages to think about. So ultimately, AI is meant to be used for vast data sets. And the process for more information than a mere human like me ever could. Obviously, things like pattern recognition, we talked a bit about anomaly detection and maybe kind of looking at documentation, but obviously, especially in transaction monitoring or looking at high volumes of transactions, they can do pattern recognition or spotting anomalies better than me as a human ever could in kind of quick succession. And then finally, just thinking about continuous learning as well. So I think if you're looking at your traditional transaction monitoring engine or anything like that, it usually takes loads of iterations to get it right. But actually, if you kind of maybe adopting AI, there's efficiencies in using that to kind of do it quicker than maybe you could, because it takes care of itself depending on what adoption you're looking at.
Thank you. So Jan, turning to you as a practitioner, so despite the buzz and the potential advantages James has just outlined, it's obviously very early days in terms of actual adoption and the number of financial institutions actually using AI as part of their daily business operations. So on the flip side, I guess, what do you think are some of the questions, the concerns, the considerations that companies have when considering whether to adopt AI?
Yeah, first I want to say, I am definitely also very excited about the potential for a lot of these use cases that James mentioned. But as you said, particularly within the AML space, I haven't seen many people really getting it right or really cracking this. And I think there's a couple of reasons why it is quite difficult. The first main one is the data set, right? I think one of the places where we've seen it being very, very successful is, for example, in fraud. Fraud is a beautiful thing in the sense that your data set is quite good. Within 2 weeks, you will probably know whether a transaction was fraudulent or not, because somebody lost money and will come and tell you that they've lost money. Nobody will come and tell you 2 weeks later which transactions were actually linked to money laundering and which ones were not. So you don't have that data set to continuously feed your model and train your model, which then also might even run the risk of that you actually become quite blind to new typologies and new things that are happening because you're so focused on the old cases that you know were to be true matches, and that kind of just reiterates itself. The other thing that we've kind of seen with some of the clients that we work with, or also some of the providers, is that people just get a bit too excited about it as well and just start hiding behind their systems and behind our model and don't see the need to kind of still build out a very highly skilled team of compliance professionals that actually deal with the output of your models. Your model and your system is step one. You still need a human at some point to even to deal with the follow-up actions that come out of that. Just having the beautiful spaceship bells and whistles system just isn't enough. And I think the third point is something that I think James mentioned as well, is that need to be careful that where it doesn't become like an intellectual vanity project for some of your data scientists and your engineers, because there's so many great technology to use and so many cool things to do, but they need to solve a real life problem. And again, like, it's great to build a spaceship if your business model is space travel. If you're trying to get to Birmingham, you don't need a spaceship. And kind of matching it to the business that you have, I think, is quite important.
Yep, that all makes a lot of sense. I don't know if we can see the results of the first poll question as to the number of firms currently using or considering using AI. If not, we will work on that in the background and share those with you in a minute. I'm going to try and pose the next poll question, which is just to see which of those concerns possibly resonate with the audience. And so if you work for a financial institution and haven't adopted AI, what are the reasons for this, and whether it's the points that we've just talked through there. But also in the meantime, so Jeremy, obviously at Lucinity, you obviously believe in the potential value of AI and that any of these concerns can be overcome, and that there is this very compelling use case for AI across a variety of financial institutions. So I guess, what are your views on the points that Jan raised, and how should firms start to consider and engage with AI in a way that minimizes any potential issues, but make sure that they're framing the considerations in the right way from the beginning, and they're not trying to build an overly complex rocket when that isn't really what they need?
Yeah, no, I think Jan raises some excellent points, and to try and unpick that a bit, I think it'll be good just to quickly reflect at a high level, what's the meaning of AI and what does it encompass? And I haven't got a dictionary and physically opened a dictionary for a long time, but if you were to look at the literal definition of the principle of AI, it's teaching machines to do what humans can do. And in the broadest terms, AI captures a range of computational techniques like machine learning, natural language processing, computer vision, things that James mentioned earlier. And we have witnessed in the real world some fantastic examples of AI in action. And I'm sure Jan and James, you'll both recall IBM Watson in 2011 beating two of the best players of the US game show Jeopardy. And obviously then a few years later in 2015, AlphaGo, developed by Google DeepMind, being the world's best player at Go, arguably the most complex board game ever created by humans. And although this is, for me, really thrilling stuff, in order to overcome these concerns, we need to sort of reframe our thinking about what AI should mean in our world. And so solutions can be obviously credible and support mission critical processes that empower people and not work against them. So a lot of work we've been doing at Lucinity is really thinking about that definition and that mindset when it comes to solution design. And we sort of landed on the following, and we firmly believe that machines supporting the human should offload everything humans do poorly so that humans can do what humans do uniquely well, even better. And that is what I meant by human AI in my introduction at the beginning of today's conversation. Another really interesting thing that we've learned and discovered, I guess, over time, is that nobody really wants artificial intelligence. They just want intelligence. And AI is a great way of, AI is great, and when we need AI, we'll go AI. But there's a lot of latent intelligence in banks and financial service organizations that we can deploy and put on the right eyeballs at the right time, which will deliver immediate impact and value for financial crime teams' productivity. So I think with that context that I've just provided, sort of coming back to those concerns that we've discussed, and I think I'd say the following. The first point is, we've got to ask ourselves, what can be achieved now through simple heuristic-driven insights from your data? And how can you display these insights in a way that empowers and amplifies the human in the loop? The second point is that I think that good AI should be built upwards. So as Jan mentioned, start with the problem statement and design AI capabilities centered around the human, rather than trying, as Jan rightly said, a vanity project, introducing AI for AI's sake and imposing it top down on financial crime teams. That has been proven time and time again, not necessarily in financial crime specifically, but in other industries of failing. The other thing that I think is really important and needs to be front and center of AI development is the explainability of AI algorithms. And this is absolutely a fundamental design principle and is critical in building trust with the user, the management, and the regulators. And I think, This is quite a complex challenge, being very honest, especially with more advanced machine learning techniques like deep neural networks. And therefore, people skills are absolutely critical here. And it's something at Lucinity we're obsessive about. Without being explainable, an AI solution will fail. And the final point I want to make on this is, I think fundamentally, regardless of all that, we must design solutions that are easy to use and are understandable even for non-technologists. And I'm a firm believer in this last thought is that if the users don't love using the tool, then nothing else really matters.
Yep, I think that all definitely makes sense. And I think we'll come back to the explainability point later on as well, because I think that's a really important, I mean, it's almost a regulatory requirement. Like if you're going to use AI, it's something that you definitely have to consider very seriously. So James, I mean, one of the potential concerns is that AI makes everything too automatic and sort of eliminates the need for human input. But obviously, building on what Jeremy's saying there, that is actually not the case in practice. It's not a case of, you just use AI. It clearly is. AI is not designed to replace people. It's both playing different roles and both augmenting each other. And so I guess it's working out where you use AI as opposed to people and how you get the two both complementing each other as best as possible. So what are your thoughts on that?
Well, first I'm going to steal the two quotes. I'm definitely going to reuse Jeremy's quote that people just want intelligence, which is definitely true, and also Jan's metaphor about something Birmingham and spaceships or something. I'm definitely going to use that one again. I did like that one, but I guess a lot of developers talk about I guess the concept of augmented intelligence or human AI, which kind of Jeremy was talking about a little bit. And I've stolen a quote from Gartner just to explain it, which I'm guessing they've also stolen. But augmented intelligence is a design pattern for human-centered partnership models of people and artificial intelligence working together to enhance cognitive performances, including learning, decision-making, and new experiences. Very, very long-winded, but ultimately it's combining a human and artificial intelligence approach for a common output. And I think one of the more important things to, I guess, identify is that humans and AI ultimately have different strengths, and that's kind of highlighted in kind of maybe two learning styles or approaches to cognitive tasks that maybe we can just talk about now a little bit. And they're basically convergent and divergent thinking. And convergent thinking is basically reaching one well-defined solution through kind of one process. And then you have divergent thinking, which is identifying multiple possible answers to maybe one solution. So kind of a more creative approach to kind of solving that issue. So, and I guess what we're saying here is maybe the AI approach is more of the convergent piece and the creative divergent piece is more of the human approach. So an AI is good at identifying specific patterns and specific outliers in maybe large data, whereas people from an approach, they approach information slightly differently. So we're good at thinking creatively and critically and generating, maybe several theories to the problem or scenario that we're facing. But then if we think about that practically, there's ultimately positives of maintaining that blended approach of those different thinking patterns, which is why the blend of, AI and people is still potentially quite important to kind of combine rather than, having them separately. And then I think if you think about maybe the approach of AI, it's good at automation and, performing manual repetitive tasks, which all those things that maybe we don't want to do as kind of financial crime kind of professionals, whereas humans respond better to narratives or rather than those discrete facts that maybe AI can pick up quite autonomously. So practically speaking, with maybe say transaction monitoring, if AI presents that bigger picture by sifting through all that information on our behalf, all the boring stuff, we can then ultimately kind of get presented to that final richer and cleaner output from that, and ultimately kind of review that narrative and provide the context behind that output. So yes or no, does that need to be a SAR based on that information that's been presented to us? So I think thinking about those learning styles and how that blended approach with AI and people suggests, yes, it's kind of important to continue in that harmonious kind of way.
Yep, that sounds good. Jeremy, is there anything you would add on that as to sort of what this can look like in practice? So how a well-designed AI solution would fit into a financial crime team I think when we talked about this before, we talked about the sequencing almost. So AI does some of the sifting and the uplift, as James mentioned at the beginning, but then ultimately it passes to people for that final review and for the decision making as well. So sort of the sequence in which the different elements slot together.
Yeah, absolutely. I think there are some really exciting use cases for the application that James just outlined. I think first of all, it's a given that generally as compliance professionals and those involved in the day-to-day review of alerts from different systems want to quickly discover new connections, patterns and insights from your data. And actually, when we start to sort of delve down and really get into the detail, as of today, we're probably only really gaining value from an estimated 12% of the data that's available to us, which is leaving 88% of data untapped. Now, there are several reasons for this. One notably being unstructured data and the challenges that presents traditional computer systems, but also limitations to rule detection and so on. So there is, I think, great potential really to overcome some of these challenges through the application of AI, but the sensible application. So one of the areas that we're seeing a lot of interest in and we're working with our clients on is around, as mentioned, identifying patterns and outliers within data sets, spotting unusual behavior, and obviously looking at known typologies of bad actor profiles and identifying criminal networks to the sports of decision making and drive outcomes. But I mean, as you mentioned, James, I think importantly, humans, we can obviously contextualize that information differently than a machine can. And therefore, the ability for us as humans to respond immediately to real world political and geographical events, not just identifying risk, but responding to that risk in context is absolutely critical. So as I mentioned before, having solutions that I think can empower and strengthen that through contextual insights is really, really exciting. I think also where we're seeing the application today and a lot of opportunity as an industry, we've been talking about single view of risk, holistic surveillance, whatever we want to call it, for a long time, a very long time. And I think actually right now technology has caught up, and our understanding of how to use technology in this way is now real and proven. So there's a lot of opportunity we're seeing around the continuous risk rating of customers. So bringing together KYC, KYB data, CD data, third-party data sources, transactional activity, to really identify divergence in behavior compared to themselves and their peers. And I think this presents potentially a real opportunity to reduce cost and time associated with bulk periodic customer reviews. And I think finally on this question, Mayor, I think that we're applying human AI to understand more about the performance as well of financial crime teams. There's huge opportunity here. If we as technology companies can design systems that can interact with the financial crime teams, gather feedback from them, understand how they're using the tool, we can start to then evaluate performance. We can start to then see what our top analysts are doing versus our medium performing analysts. And we can use this to drive a real culture of collaboration and continuous improvement. I think that's really, really exciting. And I think just breaking down the barriers between compliance, operations, and frontline businesses to empower everyone with this type of capability.
Yeah, all exciting stuff. And I'm glad you mentioned customer risk assessments as well, because I think that's one thing when we think about AI for financial crime, everyone's mind instantly goes to transaction monitoring, that's probably the most obvious use case. But actually, there are other areas across the programs where it can add real value. And actually, customer risk assessments is a really obvious one, right? Where the traditional model of using a pretty limited set of data points at certain intervals in time is obviously not a very necessarily effective method, and customers' behavior can change hugely in between the points at which you assess the risk that they pose, and their risk assessment is completely out of date. So having a more automated and dynamic way of capturing all the information you hold about them and feeding that into the risk scoring, if done correctly, can create a much more reliable and effective model. So Jan, so thinking again about this practically, so at Currency Cloud, within your team, how do you think that using an AI tool could impact your team? And do you think it would be a big adjustment, or could it quite easily enhance what they're currently doing without displacing them?
So yeah, I think there's definitely a lot to be gained with that. And as we've been saying, I think that there's two places in the process where I agree there can be massive value in it. And that is very upfront in that anomaly detection, where we're doing a lot of great work with our internal data teams and external providers as well, to like, how do we continuously tune our models to really flag up what we now actually think is weird? Because it's easy to say the weird behavior, the outlier behavior, or we actually use very similar words in convergent and divergent behavior, where we talk about divergent behavior. Somebody's doing something different than you would expect them to be doing. But convergent behavior on our platform is just as weird. You have multiple actors all of a sudden doing all the same thing, where you wouldn't really expect that as well. So how do we use AI tools, ways of thinking to make that better? But then the other big part of it is at the end of the process, where you now have an analyst needing to go and look at that particular actor, at that particular transaction. How can we make them as efficient and as effective as possible? And that's where I think the beauty of AI is, it's not about replacing your people. It's about like making them better, getting them more engaged. And all of that is around customer experience, user experience, really. Like the customer being the analyst of the system at that moment in time, because it's something that I think it's been lacking in quite a few of these things, of where a lot of companies have gotten really good at building very great experiences for their customers, but users of internal tools haven't always gotten the same level of love. And it's, like an analyst, they're spending 8 hours a day looking at your systems that you've built them. The better you can make it for them, the higher engagement you'll have, the least turnover. You keep great people, you can train them further. You don't have this outflux, this drain of like knowledge that leaves your business, by giving them something that is actually engaging to work with, but something that draws their attention straight to the most relevant bit of information. If you have your analysts spending half of their time doing data gathering, that's wasted time. Like they should be analyzing the data, and even based on what is particularly flagged, a system is probably also better in finding the best way to visualize that data, or even knowing what is relevant data. Okay, like you're looking at this particular actor, but here are all of these other people that we think you might be wanting to look at as well for this and this and this reason. That is something that no person ever would be able to like individually flag through, but like with this, using this AI at the tool that analysts use, can just add so much more value. And it's, like I think it's something very positive, and that working with our analysts and kind of like the improvements that we've made, they're very excited about as well.
Yeah, you can imagine that. I mean, James mentioned it as well, sort of the manual tasks and the repetitiveness of, as you say, fetching data and sifting through things. And there are figures cited in reports, but the turnover in sort of particularly analyst level teams within financial crimes can be very high, because that is not particularly rewarding work. And when we were talking to the Lucinity team, I think it was last week, we're talking about statistics and reports that were saying that 98% of transaction monitoring alerts in some larger financial institutions are false positives. So again, what have you done with your 8 hours today? I have cleared a bunch of false positive alerts. That is not rewarding. And you also develop a muscle memory of just going through and saying, no, not concerning. And you're going to miss the things which genuinely are, because they're so rare. And so being able to remove more of that noise and have your analysts actually look at things which a tool has properly assessed as concerning, and then highlighting other related bits of concerning information, is going to make their work much more interesting and engaging. You'll be able to keep teams engaged, improve their productivity, and hopefully keep people for longer and help them develop within the team. So I think that's the message where people are concerned that AI may replace that human input, is that it doesn't. It should actually make it much better and more rewarding, and enable you to keep people for longer and have happier, more engaged teams.
Yeah, who are also much higher skilled, and it's not just keeping them, but like when they then go into their next role, you've got this great network of alumni who've come through your company and learned all of these great things, and now go and do it somewhere else. because it's a very, integrated small world of compliance within the fintech space. So the more great people we can have that have come through, the Currency Cloud Learning School, going into a bunch of other places, the better.
Yep.
Absolutely. One other thing I just add to that as well. I think one of such a useful exercise, I think, for people to do, if you haven't done it for a while, spend 3 or 4 hours with your analysts and sit down with them and shadow them for the day. And it's amazing. I've done it with a couple of our clients as well. And you look at people that have been working with these tools for maybe a couple of years. And I think, Maya, you're absolutely right. The muscle memory is phenomenal. I mean, the cut and paste between systems, they're just, like whiz kids. But the questions then you start to ask around, so how long did it get you to get to where you are today? How long does it take for a new person to join and get to where you are? And then you start to see the sort of cracks appearing. And I think this is such a useful way to regularly check in with the teams and find out how they're using the tools and look for those opportunities and quick wins. And we're seeing great output from that. Yeah, and it brings up actually another potential use case for AI within it to kind of, how do you break that muscle memory? Like, how do you make sure that actually, we know this analyst has dealt with 5 cases that are quite similar in a row. Let's go and give them a 6th one, which is quite different, to break up this habit of, I just do the same thing case after case, because you end up in if 10 were clear no's, the 11th, you might not be quite as diligent as with the previous 10. So how do you kind of give them a clear mix of different cases to work on, also to make it more engaging for them?
Yeah, that's a really interesting point. You can shuffle up, because you can obviously use it to prioritize cases better so that more urgent things are dealt with faster. But as you say, you can also, the tool knows why it has flagged certain things as concerning, and it can, so it's like, if you've, as you say, cleared 10 alerts, it's like, okay, this is a high priority one, which we are fairly sure is, which does seem to have more red flags and more indications, and it's more complex because we found more pieces of information that lead to that picture. So this is a very different kind of case to the ones they've worked on previously. And yeah, you can have the tool help to mix it up and create that variety, which is, super interesting. So I'm going to try and launch the 3rd poll question. Apologies, we're having some problems with displaying the results, but we will endeavour to put the results in the chat so people can at least see the results and possibly circulate at the end of this as well. But we'll try and launch the 3rd one, which is thinking through some of the things we've just been talking about, is where, in theory, where do you think AI might add value to your firm's financial crime program? So as you mentioned, transaction monitoring is probably the most immediately obvious use case, but are there other areas which you think it could also add value and prove useful? Let me just publish that now.
I can see the results, Mara, if you want me to help.
Oh, excellent, yeah.
So from the last question, if you've not seen it, I think the most popular answer was cost, basically. So I think if you click on the answer, you should be able to see them. But actually, seems like everyone has lots of different choices, so it's not a clear-cut kind of response there.
Well, on cost, I suppose that's an interesting point that has come up before, is that one place where AI can be hugely useful and in fact may end up not being across the system is for scaling teams, where you're dealing with large increases in volumes of transactions or new numbers of clients, and you can actually use AI. If you're making your processes more effective, that's actually a more cost-effective way of being able to scale than hiring a lot more people into your FinCrime team. So you remain on top of your increased volumes as you scale without having to incur other costs. So,
yeah, definitely.
Yeah.
Whereas this vote seems a bit more unanimous at the moment, if you can't see it. So it looks like, transaction monitoring and screening seemingly people think are the more likely areas where they could potentially add value, which I think I probably agree, to be honest. You can see Jeremy nodding as well.
Yeah.
Yeah. And I suppose also when we're talking about, the reasons why people may hesitate or might not be going ahead with adopting AI, it makes sense to work out the most immediately obvious place where it can add value. You're not going to suddenly overhaul your whole program and introduce AI in all of the possible areas where it could add value. You choose a clear use case, something straightforward, and sort of build up gradually. And if you later see an additional use case somewhere else, you can do that, but obviously makes sense to do it more incrementally. So I can now see the results. In fact, so sort of 38, 39% saying transaction monitoring, around 30 for screening. So I think that probably does make sense and align with what we see when we're talking to firms about where they might be considering introducing it.
All those hugely operational tasks that create huge volumes.
Yep. And where without the use of good tools, there is a lot of sifting of false positives, and it's a lot of box ticking rather than actually adding value. So we've talked about how this looks for firms and why they might be excited about adopting AI and what it could mean for financial crime teams. So James, what are regulators and industry bodies saying about using AI for financial crime compliance?
They're saying the same things, but 10 years after they were said originally, potentially, just to kind of get my dig in there, I guess. But I think ultimately, in theory, they're very supportive, but naturally, kind of interpretation and actually kind of implementation into guidance and regulations is always going to be slower than we would want, I'm afraid. But they are receptive, and actually, when we think about AI, it marries itself very well to the fundamental principles of a risk-based approach. So across the board. So I think because of that, very receptive, and I think they're broadly very encouraged with innovation and technology generally at the moment, anyway. But I think they're not necessarily kind of give any advice on specific use cases or methodologies. I think they're a little bit kind of further away from being able to give any advice on specific methodologies that maybe they would recommend using on that front. But definitely, like a key theme from sifting through kind of various things over the last few years, it's about governance. Is that there's something they really want to kind of to maintain on top of, which again kind of goes back to that explainability and things like that, and how easy everything is to interpret. But then I also thought I'd highlight a couple of useful kind of signpost, a couple of useful documents that whenever I talk about AI, I kind of, and I'll post them in the channel in a moment as well. But FATF did their kind of piece on opportunities and challenges of new technologies last year. So that has a big chunk on AI and some of the kind of complexities there, which I'd always kind of push people towards to read. And obviously, if FATF are talking about it, eventually one of the supervisory authorities starts talking about it, and eventually it goes into regulation, which is always really positive. And actually in that report specifically, they do, linking this slightly back to the kind of topic we're talking about today, they did specifically say that technology is a complement to systems rather than a replacement to people. So which kind of links back to very much the topic, what we're talking about at the moment. And then the other kind of I guess report that I would link people to which is a bit more recent, especially if we're in the UK. So the FCA and the Bank of England, I think this was a couple of years ago actually now, they created the AI Public-Private Forum. But actually they released their first report in February this year. And whilst this isn't an AML FinCrime specific report, it does talk about the use cases there, the complexities and the expectations for governance and things like that, which is always useful for people to follow. And then I guess the other main thing in terms of themes, I think it's just important to understand there are always nuances to interpretation in countries. So in Germany, for instance, in BaFin, always expectations are that there is a human element or intervention for, I guess, the application of AI and whatever kind of facet you're looking at. And then finally, just some of the challenges that are, especially in these two reports, that they kind of cherry pick as well. So we talked about explainability and how easy everything is to interpret. I think another one of the challenges that they raise is just the technological illiteracy of some of the supervisors and how they're slow to adjust from a regulatory perspective. So again, going back to my slight rant at the beginning. And then finally, unintended consequences. This is something that they've linking to AI quite a lot. So things like bias and how it connects to things like de-risking and financial inclusion.
Yeah, bias is a really interesting point because it's something where, in theory, again, if the AI is designed correctly, you can use it to minimize and reduce unintended consequences and bias in decision making, but without actual thought. If you just put in your historical data and your historical decision making, which is obviously done by people with all of their their implicit and unconscious biases, the algorithms could potentially just replicate those. And so it's an area where there is real potential for AI to make a difference. But again, going back to your point about governance being important, it's something which you probably need to actively consider and address, and consider the quality of the data that you're putting in, and look at the outputs and see if you are perpetuating those biases, or if there are ways to use AI in that process to reduce them. But yeah, interesting and important that the regulators do flag that up.
Data is biased, people are biased is what someone told me, which is probably true.
Yeah, I don't know if Jan or Jeremy, you have any thoughts on that?
Yeah, I agree.
Yeah, same.
And yeah, it's, you mentioned Germany, but yeah, that's something elsewhere. So there's EU legislation as well, regulations, sorry, that specifically require human decision making in addition to any automated systems for any decisions that significantly impact people, so impact like human customers. So again, going back to the point of how AI fits in, is that it can do that safety, it can provide the information, it can highlight the risks, etc. But the ultimate decision, for instance, to offboard a customer or refuse to open an account, or to file a SARA report, is ultimately going to involve a person doing that, and that you don't just you can't just rely on the tool to make those decisions. That should still be done with human oversight. Do we think that, this is an open question, I don't know the answer, but is this a case, we often see this when we discuss innovations and new types of technology, where a lack of clearer guidance from regulators can hold firms back from adopting it, that people don't want to be the first movers because they're not sure how regulators are going to respond, if they're going to have a hard time explaining it to the regulators or convincing them that this is a better approach? Do we think that the guidance and the messaging from regulators is sufficient for firms to feel comfortable moving forward with adopting AI, or would they need more specific, explicit encouragement to do so?
I think that, I'll start, and seeing as I've already been talking, but I actually think some of the primary legislation is sufficient generally, but obviously it's the supplementary guidance that probably from supervisory authorities or independent is where we're lacking in terms of that kind of adoption piece, because it's one thing in the AML regulations saying you're expected to monitor larger or usually complex transactions, which is easy. Yeah, that's AI can do that fine. But obviously it's another thing when the FCA or whatever or JMSG don't have the specifics that maybe you need.
Yeah, I would sort of think that the situation we're in is the current tools that are deployed and being used, they aren't working, right? They're not getting where we need to get. The fact that we've been talking about such high rates of false positives for such a long time with incremental improvement, not working. So I think demonstrating that you're trying to explore and create a blueprint for transformation and change for a business is really positive. I think any change management that you do and any movement away from mission critical systems to potentially more advanced solutions needs to be staggered and staged. One of the things we've done with one of our clients, went through a very robust process of evaluating certain aspects of the models in comparison to existing rules to ensure that there is not only coverage, but we can demonstrate the uplift to that. And all that needs to be documented, audited, and in some instances taken back to the regulator so you would keep them fully informed and are completely transparent. But I think we can't hide behind the fact that the regulators haven't given a position, because if we do that, we're just not going to. We're going to have the same conversation again in 2-3 years time. So that's my sort of thoughts on it.
Yeah, and I think we need to take everyone on that journey, right? Because again, it is a very integrated network. No financial institution stands by itself. So the same way as you kind of need to take your internal stakeholders with you on that journey of how do we evolve to continuously kind of smarter, better ways of doing it. At its highest level, how do you take your regulators with it? It's also, for quite a few of us, not just one regulator. As we operate in a global market, you probably have licenses in quite a few different locations. So how does that kind of sit at that level? And then again, for us, basically what we sell is our banking network. So we might have, our regulators happy with it, fine. Your individual banking providers to which you plug in, you also need to be okay with it, and also need to be able to explain to them what it is that you're doing and why you don't pose an AML risk to them. So it's kind of getting everybody in the wider industry kind of up to that gradual way of progressing.
Yep, that's a really good point, and something which is often overlooked, the notion of banking partners and other firms that you interact with in the ecosystem, and how, ultimately you have to convince everyone that what you're doing is for the better and is designed to improve your controls. So I guess final thoughts from everybody on the likely future direction of travel. Jeremy, maybe you can kick us off.
Yes, I mean, look, I think it's certain that AI will play an ever-increasing role in the work we're doing, obviously centered around the human. I think one of the key things is that AI open source technologies are going to continue to become more sophisticated. So that obviously presents potential future gains that will be even more significant. However, on the flip side, this means that upskilling, hiring and retaining talent will become even more critical. So I think that's a key point and a trend that we'll see. The other thing, and this links back, I think, Jan, to what you were saying, federated learning will move, we firmly believe, from the academic and the science communities into operational, functional capability in the medium to long term. So there's a real push for collaboration between the public and private sectors, certainly among AI experts. And however, what we're trying to do here is think about how federated learning can be used, not by moving data, but by actually having an algorithm that can move between different institutions without sharing data. And Lucinity, we have a patent in this field, and it's a significant area of innovation we're going to focus on over the years ahead. So those are a couple of thoughts that I have.
Cool. Any final thoughts from you to Jan, Jeremy, James?
Yeah, I agree with what Jeremy has said, and I think it's going to be an interesting kind of couple of years of how we see these things evolve further. And I do think there's going to be more use cases. People are going to get more excited about it, and you kind of also move away from, where still quite often transaction monitoring and screening is seen as something we have to do, to becoming like a competitive advantage for companies. You know what? We're actually really good at this, specifically, again, in the BaaS players, where kind of just sell our knowledge. Like we're the guys who get it right. And I think, it's an exciting time and place.
I think it'll just be it'll be a natural transition, like everything is. It's an all inevitable. I'm personally looking forward to when AMLA finally gets set up, as it were, and so that's that, and when they start working on the European single rulebook, and whether there's anything specific AI that they look at there, that will be interesting. But yeah, I think it's all very much inevitable. It's just how long the regulators take to write it down.
Yeah, and that tipping point where enough firms have started to adopt it that it becomes sort of the accepted standard, if you like, that enough firms are doing it, it becomes something that you have to persuade banking partners or the regulators why you haven't done it yet, as it becomes expected best practice. And yeah, I think your point, Jeremy, on the federated learning is hugely interesting. So there's so many conversations, obviously, across the industry, and we've been party to several through the FinTech FinCrime Exchange and other avenues, looking at data sharing and ways that firms can collaborate. But obviously, there are such restrictions around sharing data and sensitive information that becomes very, very difficult. But if through AI, you can share learnings, so typologies, for instance, and as the algorithms become smarter and more accurate through all of the data that they have been trained on, you're not sharing the data, but you can share those learnings and the smarter algorithms across different firms, larger data sets. And that's a hugely interesting way of maximizing learnings from numerous firms without running into problems of sharing sensitive data.
Yeah, absolutely. And I think also, even for the largest financial institutions, which are multinational, they just struggle sharing sometimes information internally within the confines of their own organization.
Yeah,
for a whole range of reasons, data privacy and regulation as well. So there's also, I think probably the I say easy very, very cautiously, but probably the way to sort of start testing this technology is within an institution that's multinational, you can break down some of those perceptions and barriers, and then look to then prove that out and expand into maybe wider financial services and collaboration across the industry sector.
Hugely exciting stuff. Okay, thank you all very much for that. So having a look at the questions, there's a point here around whether one of the largest challenges can be the quality and the quantity of data available, and whether that's a challenge for adopting AI and machine learning. Real thoughts around that? Like, do you need to have diverse, high quality data and a large data set to get started with AI, or are there use cases, and is it applicable to firms with less data?
So data is absolutely critical, absolutely. There are a couple of things though that we're seeing helping overcome this sort of challenge where you may not have as much data internally in your own environment, or you're not happy with the quality of that, and that is around the concept of leveraging synthetic data and how we can use synthetic data to plug the gap, and I think also help sort of train and demonstrate and prove out the models. I think it's also really critical before you deploy any type of system like this is that you're going to have your pre-production environment to start to validate the outputs from these types of models with your data, maybe with synthetic data and a third-party data coming in, to sort of see how that is performing before you start to do the shift and lift into then the production environment. So these are just a couple of thoughts that I have in relation to data. I don't know what you think, Jan.
Yeah, I agree. I think it's both size and quality of data. You need to have a meaningful data set based on 10 transactions. You're not going to build a model, but it's also the quality of that data, right? Like how structured is it? If it's all in a free text blob, again, it becomes considerably harder rather than nice structured big data sets.
If anyone has any other questions, please do feel free to pop them in the chat box now. We have 5 minutes or so to answer any of those. Have one coming through now. But yeah, I think the point about synthetic data is a really good one, and it's also something where it might be worth having a conversation and considering this internally now, rather than just saying, oh, our data quality isn't good enough, or we don't have a large enough data set. It's something that you can then work towards and say, well, okay, what do we need to do to make our internal data better so that at a point in the future we can utilize it and feed it into an AI system, rather than just dismissing it and saying we can't do it based on the current state of our data. Sort of working out what you can do as a first step to improve that and to get it ready for ultimately maybe being able to use it with AI solutions in the future.
Yeah, absolutely. I mean, I think we can't let perfect be the enemy of good, right? Yeah. And I think that if we can start to think about where we have some degree of confidence in our data, let's start using that and experimenting with that to see what we can achieve. Only then will we develop the momentum and the business buy-in to start to expand our capabilities in this area.
Yeah. There's a question in the chat. Are there any incentives from the EU to develop this technology in the financial sector? I'd say not that I'm aware of, but panelists.
I mean, incentives in what sense, other than to prevent financial crime and reduce it? I think the biggest incentive, rather than just literally reducing financial crime, is always going to be that operational efficiency piece. I think you referenced it earlier that like the huge amounts of false positives that people kind of sift through that take kind of like forever to get through. I think that's always going to be the biggest incentive, almost over the justification of preventing financial crime, because bodies ultimately cost money for the actual kind of business that you're working for. So I think that incentive is always going to be there, maybe rather than the probably moral incentive of actually preventing the crime itself.
Yeah, I think it's useful because if it's compliance teams who are driving this, and they're the ones who need to make the arguments for internal budgets, etc., and time and resources, project management resources, etc., to look into an AI adoption program, I think having those operational and those cost arguments are going to be effective. Sadly, it's not going to be enough just to say we can reduce, we can identify, we can detect, we can prevent financial crime. They will need those operational arguments as well of saying, hey, look, and it's going to reduce our cost base. And also the fact that if you can identify riskier clients at onboarding or identify them earlier on, and you can then either decide not to do business or restrict the products and services they have access to, or at least you can concentrate your resources there, so you can make sure that you're subjecting the right customers to enhanced due diligence and enhanced monitoring, going to reduce the likelihood of firms being caught up in larger remediation investigations later on, or regulatory investigations, etc., that there are going to be fewer problems down the line because you'll be able to identify financial crime risks earlier and mitigate them and deal with them properly. But again, that is sometimes somewhat of an esoteric argument, and the cost one can often be a better selling point, sadly.
Yeah, but I think, building this business case internally is quite important. And, AI needs to be a pillar, but one pillar of many facets. We don't know what the experience the business has had potentially in other divisions outside of compliance in relation to AI. They may have had fantastic experience. They may have actually had a dreadful experience, and especially if the CEO or CFO sign it off and has got visibility across the whole organization. Sometimes leading with the messaging of AI may not be the right approach in order to get buy-in and win and budget. So think carefully about how you think about leveraging artificial intelligence, focused with a human-centric approach and small steps and stages. This is going to help us then create greater incentives internally to want to invest, and greater incentives for wider collaboration across different departments.
Really good point. And again, on the point of not thinking in silos as well, there could also be opportunities if the firm hasn't looked at AI more broadly across other business areas. Is there an opportunity to use AI to better understand your clients? That helps you understand the risk that they pose, but does that also offer any business advantages? So if you see shifts in business, shifts in behavior, does that then enable your frontline teams, your business teams, to have better informed conversations with the clients and understand their business and be able to offer additional products and services and support them as they are clearly expanding their business operations or changing their model, etc.? So again, thinking about how you can persuade people to come on the journey with you internally, and how not just thinking about AI as it applies to the compliance program, but thinking if there are, how this would apply across the business, and working with the frontline and with the business teams could also be a useful way of framing the conversation.
Yeah, absolutely spot on. And, if you're going to really do behavior analytics, you don't just focus on bad, you need to see normal and good, right? And transactional data is probably, the most valuable data that you have within your institution, but only a fraction of it's been used to its full potential. So if we can start to think about behaviors in its full context, then you're absolutely right, Mayor. I'm seeing great opportunities for compliance actually to facilitate insights to other parts of the business and help drive and promote growth.
Yeah. And you work out which it can both help you develop your business with your existing clients, and also work out which client groups you want to target. Where is your business doing well? Where is activity growing, etc.? And you can facilitate conversations across the piece. Okay, I think we are basically up to time, so we will wrap things up there. Thank you very much, Jan, Jeremy, James, for all of your great insights and your thoughts today. We've added a couple of links in the chat box. We can also circulate those if anyone has missed those, would like to ask those links. We can circulate them afterwards as well. There's also a link in the chat function at the moment as to how to get in touch with the Lucinity team if you would like more information, or if you would like to have even just an initial discussion about any of these ideas. You can click on the link there and it will take you straight through to the relevant page. FINTRAIL and Lucinity have also written a white paper on making the most of AI to empower your teams, which will be circulated shortly. So you will see that available on our sites, and we will be able to share that with attendees if you would like as well. And obviously, any questions which occur to you afterwards, please do feel free to drop us a line and get in touch. We are all very passionate about this topic and very keen to talk about it with other great minds in the industry. So thank you all very much for attending today, and we look forward to hopefully crossing paths with you again soon. Thank you very much.